Hello and welcome. This is Brandon Wendell, Charter Market Technician. I'm going to do some analysis on the energy markets starting here on Sunday, the 14th of November. So, welcome back, everybody. Looking at the weekly chart right now of crude oil, this is the continuous contract to go back to September 2014, to find supply, and it's actually at the Fibonacci extension of 161.8% of the previous impulse. Right now, we're seeing that we've made a bigger move to the upside, but we do have a little bit of weakness here on the momentum. So that's called negative divergence. And as you can see, prices have retreated a little bit from the highs. We've only retreated 23%, 23.6%. That's Fibonacci retracement, as you can see right here. So we still may have, as you see, bearish pressure pushing us down towards the next retracement value of 38.2%. Long term, though, we're still somewhat bullish, but we're just getting a pullback as we look at this right now. Dropping into the daily, well, actually, before I do that, no, that's not correlation. Never mind. Dropping down to the daily time frame here, you can see on the daily chart we did do an impulse, which was basically 161.8% of the previous impulse up. So that was the continuation right there to that line. Now we're getting a retracement. This retraced 61.8% right on the Fibonacci retracement value, and we actually held above 40 on the RSI. That's a very bullish sign. And not only that, but when we moved back up again, you can see that we actually went to a new high compared to, well, it's actually about the same high, but we went above 60 on the RSI. So while there's divergence, because we should have had a little bit more momentum than that, since we went above 60, when we pull back, we're not likely to go below this prior low. So we should be able to hold at least above this price level, about 70, 78, 80, 78, 75. Again, we'll find another bounce hopefully very soon. As you can see, the prices on the last two candles have bullish pressure on those daily charts, so that's suggesting that prices want to continue to move to the upside. But in order to make new highs, as we come back up to the same price level again, right around that 84, 89, we need to have more momentum, not less. Otherwise, we're going to fail again and actually go down to this demand zone of 75.05. Looking at the smaller time frame here, the 4 hour, we're fighting to stay above the bullish bottoms, so to speak, the seller there at 40. And as we keep pulling back, we're seeing a little bit more weakness. This could be considered to be kind of a weak demand zone at this 79 level, because you can see we didn't really make new highs on that move out. We kind of stumbled first before we could. So there's definitely weakness coming into the market. That means if we do try to rally, if we get up to 83.30 on this 4 hour time frame and cannot get above 60 on the RSI, that would be a shorting opportunity, with your first target being this zone on zone right here at about 75.64, although that one's already been tested. So I would look for it to go a little bit deeper here for your first target, potentially even all the way down to 70.40 for the second target. Going into the smaller time frame of the 60-minute, you can see that 83.83. Let's see, the last zone was, yeah, same area, 83.30, so 83.83. We just fine-tuned it a little bit on the move down for that shorting opportunity, and then you've got that zone on zone, which has already been tested. So we could go down to about 75.90 as your first target. And we're definitely much more bearish here on the 60 minutes. So kicking off on Sunday, going into Monday, we're starting off with some bearish trend going on here. And, all bets are off. If we go above 60 on the RSI, then we should be able to break the supply zone. But as we reach into the zone, if the RSI is still below 60, then expect that to drop from that price level. Looking at the smaller time frame, we're starting to get in consolidation, pinging between supply and demand right now, and the momentum is really just sideways. So no real help here. We do have some stopping points and possible shorter time frame opportunities if you want them, but overall, I'm expecting to see a little bit of weakness coming in the beginning part of the week. Depending on if we can hold up on those higher time frames, we should be able to rally to new highs by the end of the week, though. Moving on to nat gas, totally different picture. A lot more bearish here. You can see lower highs and lower lows have been going on for quite some time, a couple months here, and we can't even get above 60 on the rallies. We are peaking just below 40, though, on the dips. So that's suggesting we should be able to continue down to the daily demand of 4.193 on nat gas. Going into the 4 hour chart, looking for opportunities, we're taking a second stab at this area of demand that should break. I was hoping we'd be able to bounce up to the 5.4 to be able to get a selling opportunity first for supply, then target the 4.143 as your next demand zone. But unfortunately, we may not be able to rally that high. If we can on the 4 hour, that's what I'll look for. Right now, we have a little bit of divergence. We made a similar low. We'll have to wait for the markets to open on Sunday. But if we make a lower low and we don't make a lower low on the indicator, then we should get a bit of a rally first. Maybe just up to the whole number of 5. And you can see there's a couple of levels here, drop base and actually drop base drop. I forgot to mark at 5. So we do have a 60-minute zone there that you could potentially short. For the market to stop moving down, you can see there's a positive divergence. It usually leads to some rallies, but with those rallies, we're failing to make highs. So overall, still extremely bearish on nat gas. Looking for that to continue to move down. Even on the 15-minute, you're looking for a trade Sunday night, Monday morning. There's a couple of zones right here for shorting opportunities to take you down to those higher time frame demand zones at 4.910. Moving over to gasoline on the daily chart, we're getting a bit of a retracement right now. We'll see if this is where it stops, or if we continue, there's really an overlap or confluence between the Fibonacci retracement of 50% and the demand zone at 2.1377 to 2.0760. And there's also a zone just below that also correlates at the 61.8 and the 2.0507. Bullish momentum has really died off, so we are just correcting right now. We're not reversing. We're still bullish for the most part, although we just did make this high without going above 60 on the RSI. So if we get another high that doesn't get above 60, that would confirm a bearish trend on the gasoline daily chart. On the 4-hour time frame, we've got a couple of supply zones overhead. This one's already tested, but the lower one, the 23819, 23977, looks pretty good for a shorting opportunity. We've already tagged this area of demand at the 2.2088, so we could go a little deeper into that for our first touch and test. Or I should say our first target really is what it is. The overall momentum is pretty bearish. You can see we're getting below 40 right there, so can't seem to get above 60 on the most recent rallies. So I would say we're going to continue to push down. We may not even make it up in this 23819, but that would be the shorting opportunity I'd look for. So looking a little lower here, 235 instead of 238, we have another area of supply on the 60-minute. Pretty good selling pressure there if we move up, and we cannot get above 60 there on that RSI. So extremely bearish right now on that market. Looking, we just pushed off the 226, but we should be able to make it down to 220, no problem. And the smaller time frame, unfortunately, we've already tagged this supply at 232, so we may go a little higher, or just right now from this consolidation actually break to the downside. But overall, it's got a very heavy feel to this market. It looks like it wants to go down. And the last energy market is heating oil, which is showing a little bit more of a retracement, almost 50% already, and looking a lot weaker than gasoline was, or even nat gas, which was pretty bearish. This is looking pretty bad. Not as bad actually as nat gas, but we do have a demand zone here at 2.3, basically, that area. There are some fib levels along the way that could hold us up. We have not broken below 40 yet, so we're not really in a strong bearish trend, but just seeing that we're getting some weakness coming in. The most recent rally could not get the RSI to move above 60. That's a bearish sign. That's the second time. You had two highs. Neither one got us above 60, and that's why we were able to make some fresh lows on the most recent low. So every time you see that the RSI, the prices rally, but the RSI cannot get above 60, expect fresh lows to be coming on the next move down. It's pretty typical for the price action. So looking at the 4-hour time frame, we are coming down towards a tested zone of demand. I don't think it's going to hold very well. You can see that we've already been pretty deep into the zone, wiping out a lot of the buy orders. Even this one's been tested a bit, so we can make it all the way down to 221 eventually. We'll probably stop along the way, and before that, we may also bounce a little bit. We got the 2.4955 as a nice supply zone if we can make it that high on the 4-hour chart. Dropping down to the 60-minute, you also have a supply zone a little lower, 24585, as you can see here. And we'll see if we even get that. We might be consolidating right here. It's not really a great triangle, but you do see consolidation. Might just end up breaking down from here. And finally, on the 15-minute chart, you can see the consolidation a little bit more, the consolidation of the lower highs and higher lows. Momentum is really dying off, but shifted a little bit more bearish. We do have some overhead supply, but we may just break out of this kind of sideways motion and go to the downside. So keep an eye out for that. That's what I got on the energy markets. I believe that's the last one. So until next time, trade safe, trade well. If you like what you saw here, make sure you subscribe, and that way you'll see my videos that I'm going to be posting hopefully every week on the various markets of the futures markets and even some cryptos as well. If you want to follow me on Twitter, I'm at TraderBDubs, and catch me there as well. Until next time, trade safe, trade well, take care.